All right, welcome everybody to Stock Analysis Friday. Great to have you here once again. All right, so as expected, all right, the market this week has made an all-time high. If you remember, we were looking at that target zone, and it's getting really, really close to it now. So I think probably we're in, basically an arm's distance from it at the most. And so I think we'll hit that. Not exactly hard to say when. We get a little pullback and then another surge forward, but we're on our way to that. So most of our long picks that we've come up with here have done really, really well in anticipation of that. So good job, everybody. All right. So once again, Stock Analysis Friday basically is here for you. We're going to be looking up stocks or ETFs that you need me to look up and do an analysis on. So I'm going to go through a few administrational items like I do every week, and then we'll go ahead and get started. So let me just get the PowerPoint up here and let's get going. All right, so first thing I want to talk about, of course, are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. You need to be aware of the risks. The risks are real, but they are basically everything we do in life, right? So you got to be prepared for that. And in trading, it's no different. So first of all, fund your account, your trading account, with money you can afford to risk. And then, of course, know how to do risk control on each and every trade. We call that our trade risk. And then finally, check with your financial advisor on any analysis I do here to be sure if I recommend something, it's suitable for you. I don't know your personal situation, and of course they do. So definitely check with them on that. All right, now if you need help with anything on risk control and money management, I've got two great books dedicated to that topic. I've also got a new book that we're basically finishing it up at the end of this month. It's called The Art of Trading, second edition. Originally, I thought it was going to be about 450 pages, and now it's pushing almost 500 pages. So it's a pretty good-sized book. I've tried to cover every important detail that I've come across in my last 30 years of doing this, and I think you're going to find it quite beneficial. And I think there's going to be something in that book for everyone. So definitely check that out. You can pre-order it now, and then I believe Amazon, what they do is charge you when the book is shipped. So you can check that out. All right, when we look at charts, we're going to be looking at a lot of software that I created, and this software is going to be on all the charts that we do. I'll put some links at the bottom here in the recording for you to learn more about our software and to purchase it if you want to. One of the purposes also of Stock Analysis Friday is not only to help you, but also show you the advantage of having really great trading tools. So that is a real big benefit, because so many people, when they approach the market, they do it emotionally. And we try to take that emotion out by having the right trading tools. So you're going to check that out, and you'll see me using that along with other forms of technical analysis. All right. And then finally, give us a like, and thank you for subscribing. And if you have anybody else that you may be interested in this type of analysis for their portfolio, definitely bring them by here. I'll be glad to do that for them. All right, so let me switch to full screen here, and let's go ahead and dive into the charts. Before I get going here, just a quick shout out. Hi, Stuart. How are you doing? Welcome to you as well, and I'll get to your picks. We've got a lot of people logging in now, so great to have everybody here. All right, basically, I just want to run by what you're looking at here. So we have three charts set up here. The chart on the left is a 60-minute chart. This is our short-term aspect of what we're looking at. Then we have the daily chart. And the daily chart pretty much is your intermediate or primary chart. And so this basically, every price bar represents a full day of activity. And this is very common type of chart you would see, like when you go to a website on finance and looking at a stock or something, or you open up a magazine or a newspaper. So this is kind of what we consider the primary chart. And then we have another chart over here, and this is a weekly chart of the same symbol, and this gives us a long-term aspect. So when we do these three charts just on one stock or ETF or whatever you're looking at, it is a great way to see what's going on the short term, the intermediate, and the long term. So it helps us time the trade better. And then we have our software, of course, loaded in here. We have the OWL down here, which is measuring momentum and helping us count the Elliott waves. And then we have the PTF here, which is the precision trend filter indicating more highs when it's green. That has about a 75% probability, which is kind of huge in the markets. And then under that, we have the trend line master, another one of our indicators that gives us the quick analysis on the trend. And then we have the ERI under here, which is another one of our software tools that we're looking at greed and fear. And then on the chart itself, if we go up to the chart here, you'll see these triangular pyramids. And these are basically looking at high probability trend trading patterns on the price bars we're looking at. And so basically they're taking into account support and resistance. They're taking into account the fractal nature of the market. And they're also measuring momentum in their own right based on the price bars as the pattern unfolds. So that's our software. And then up here at the top, we're not going to be using this today, but these are our scanners. So those are up there as well. All right, so that's kind of what you're looking at. And we're on the NinjaTrader charting platform, which is a really nice platform. Our software also works on TradeStation. It works on eSignal, multi-charts, MT4 and MT5. All right, so we're pretty well covered out there on the major platforms and, of course, TradeStation too. All right, so let's dive in. I've got Bitcoin up here. Before I get to your stocks here, let's just quickly go over what we're looking here on Bitcoin, because I get asked about Bitcoin a lot. So Bitcoin basically started a correction back in March, and you can see where we topped out here, and then it started to fade and go down here. Well, we may have a bottom in that correction here. We're starting to pop up. Now, I've drawn, I don't know if you can see this at home, but hopefully you can. I'm going to enlarge this a little bit to make it a little more clearer. But hopefully you can see this red line here at the top. And that red line basically indicates a key level of resistance. So if we can break through that, then that is going to add to the probabilities that we are now have begun the next leg up on Bitcoin. So it still could falter, it still could come down, but I'd like to see it get above that red line, and then the probabilities of the correction being over increase dramatically. And so the high of that is roughly 67,272.73. So for those Bitcoiners out there, I'm going to repeat it. Write that down again. It's 67,272.73. And of course, if you're watching the recording, you can just reverse that until you get it. But that's an important number. And if we get above there, and we may do that today or maybe tomorrow, we'll see. But that's a number you want to keep track of. Likewise, we have another number based on this low here at the base of the pyramid down in here. And that number is 60,150 even. And if we go below that, then that may mean that the bottom is not in, and then we're going to go down into this target range here. So we'll see how this unfolds over the next week. But nonetheless, no matter what happens, one more low where it takes off from here, ultimately, even if it broke down and went down again, this is still in a bull market, folks. All right. So this correction is not, this is a temporary correction. This bull trend is not over. All right. Delayed maybe a teeny bit, sure, but not over. So if you're one of these long-term Bitcoin holders, you're okay. Just realize that it may be a little volatile until it starts to move its leg up. And it certainly may be doing that now if it gets above that red line. So keep that in mind. And again, bullish on Bitcoin overall. All right. So now let's get to see what you guys want to look at here today. Let me start, Stuart, with you. All right. Let's jump into PFE and see what's cooking on Pfizer. Give that a second to load there. Okay. So basically Pfizer, if you look at the chart on the far right, and I'll make this daily chart in the middle show it too, but you can certainly see this big downtrend. All right. And now we seem to have some type of bottoming consolidation here. So that's kind of interesting. And I think, Stuart, what you've keyed on here is a breakout from this consolidation. All right. So basically this chart looks good. This chart here, while it looks good, all right, we do have bearish divergence building in this leg up. So let me just focus a little bit more, or zoom in, I should say, on this daily chart so we can kind of see what this 60-minute chart is showing. So this leg up here represents this move here on this chart. And so this is giving us over here an inside look at the momentum that created this leg up. And when we see bearish diversions, what it usually just means is that this leg is getting mature and we could have a little bit of a pullback. Now we have a very strong owl here. Remember this one? This one measures momentum. And so the momentum is still very strong. So doesn't mean you can't get a little pullback, all right? But it should, again, go back up. So I'm thinking here, all right, Stuart, you're probably long on this or thinking about going long. If you waited, you might be able to get in at a little bit better price once this starts to pull back a little bit. And if it did it today, for example, you could probably get in around 27.5, and we're at 28.5. So maybe a point better, or maybe a little bit more. It could go down to that 26.68 level. But nonetheless, in this case here, I'll draw it here on this chart so you can see it better here as well. But basically, we're looking right around that area there for a pullback. So if you go long here, you want to put your stop below those blue lines there as best as possible, and that should protect you. In terms of the weekly chart, we still have an active short position that has not been stopped out on this weekly chart with a stop here, and we have red here. So I'd like to see it get above there before I got overly excited, but this certainly, all right, is looking like an early entry that makes sense here. So I guess I'll put this down as a buy with a few reservations in that you want to make sure that you put your stop low enough as not to get stopped out. So right around down in here probably would be the most surest place. All right. Otherwise, you could wait a few days or a week, and you might even get those prices down there and buy then. So I'll leave that up to you as what you want. But I like it. I mean, the short-term charts are certainly a buy to some degree there, but the long-term chart is a little early to go long. But sometimes that's what we do. We go in early and take that risk. All right. So that is PFE. Let's take a look at RNG next. Ring. All right, so this is another one that has popped up, and if you remember last week, I'm glad you brought this one back, Stuart, for this week, but if you remember last week, we were kind of waiting for it to burst above this red line, and now it's doing it, okay? So it looks like it's definitely starting to move out of its channel. The next red line we could put up here. So we're not quite out of the woods yet, but we have broken out of a channel that's been in place since, let's see, I would say almost last, September or October, right around in there. So that's a good sign. We've got bullishness here. We do have, just like the other one you showed me, it looks to me like here we're coming back here a little bit. So I would anticipate a move down and then a surge forward. So let's go ahead and draw our fibs here. All right, and see. And I draw them a little bit differently than other people, but you need to put your stop under 32.97. Okay, so that's where your stop should be for this. Or wait and see if it gets down there. But I'm going to call this a long-term play. So if you're trying to get in early on this, then go ahead and go in. And be prepared to hold this for quite some time, okay? And we should be able to get a target, I would say, basically up into this territory here, which is quite huge. You know, you're talking about almost beginning at $94, going up to $136, and then possibly $205. So I'm going to put that down as a buy. It's a long-term one, though. All right, but it certainly is a possibility. And again, it's an early entry. So if you wanted to wait for a pullback, you could certainly do those. And Stuart already owns them. So I don't think there's any reason necessarily to get out of any one of those unless you're concerned about the pullback area. Okay, if that's too much for you to do, then you might want to think about getting out and then seeing how much it pulls back. All right, I'll leave that up to you. All right. All right. So good morning to you, Alexander, as well. Alexander is in the house. All right. So let's see what else we got. Let's take a look here for Kenneth. Hi, Kenneth. Kenneth is also in the house here. NVIDIA going to 520 earnings. Okay, going into 5. Yeah. All right. Let's take a look at that. Earnings are coming up on that. So let me bring that bad boy up. All right. So NVIDIA is looking really good. All right. And I think we may have looked at this last week. I can't remember if we looked at it last week or the week before. But notice here, the last time we looked at it, we were anticipating it getting down into this target area. So this is a 3. Notice the owl has a wave 3 for Elliott wave folks. All right. And then you had an A, B, healthy C. So whenever you're looking at a correction in the Elliott wave, which is a wave 2 or wave 4, you want to see, especially in a wave 4, you want to see a couple things. You want to see this good, healthy ABC pattern. That if you don't see that, then it may be going into a minor or a complex correction, and the other waves have just not unfolded yet. But we've got that here. We also hit the target zone. So all the check boxes are being checked here. Wave 4s, if we go down here, must have a red owl. All right, another check box checked. All right, and now we're moving up into positive area on the owl, which would be wave 5, right? And you always on wave 5 have bearish divergence because that's what separates 3, the most powerful wave, from the final wave. And the final wave makes a new high usually, so not surprising, but it doesn't come on as much volume or excitement as wave 3. It's not quite hyperbolic. You see how hyperbolic this is? That's a wave 3 undisputable. All right, so this is very clear pattern. I love this. Let's go over to the long-term chart here. Green, green. This owl is so far above the 0 line that you don't want to be shorting this baby yet at all. Okay, look for pullbacks and buy the dips when it's like this. So am I going to recommend it? Let's see where this thing is going for a target first. So yes, I like it. No reason not to be long in it. If you're long, I would stay long. But now I want to just see, for those taking an initial position, what kind of possibilities are out there. So the target, short-term target, is anywhere from 1,115 to 1,340 before we see the end of wave 3 on the weekly chart. So this would be a 5. There are 5 waves inside any trend, and this trend here will end on a 5th wave here, which will be this one, and this is still a wave 3, so it's the 5th wave inside a major 3. So what we're trying to do here is you're trying to get enough juice out of here to make it to wave 5. Now, what I would recommend at the end of wave 3, you got a major decision to make. So when we get to wave 5 up here, that'll be the top of wave 3 here. You're going to have a major decision to make. And that decision is, do you want to hold it during a significant pullback on the weekly chart? Because that's going to be between 38.2 and 61.8%, which is huge. So most people would end up getting out at the top of wave 5 on this daily chart, so they avoid the long-term correction on the weekly chart. And of course, a wave 5 on a daily chart means the trend is over, so you go into a major reversal on the daily chart as well. So here, if you put your stop, let's see where our stop needs to go. We don't want to put it here. Let's try to put it here. I would say I'm going to have to enlarge this a little bit. I'm trying to figure out the risk to reward, which is what I'm doing now. All right. So in terms of retracement areas, okay. So that pyramid, okay. You probably want to put it just under this area here. So let me just lighten that like that. And let me see if I can. Give me 1 second, guys. Okay, so I don't want to do that. I want to do that. Okay, so this here, okay, is an area here. Let me remove that one too. So your stop needs to be down in this area here. And so you're probably looking around that price bar, which is a low of 832. All right, so that would give you probably not quite 2 to 1 into the area, but if you made it halfway up, you could do that. So let's put NVIDIA up and call this a short-term trade. All right, and then when it gets to the target, trail your stops up. Okay, so NVIDIA is okay. All right, so you see, actually, you know, the stock market now is on a tear to the upside. And again, as I explained in my previous videos, I kind of thought that would happen. There was a lot of people out there saying, oh, we're going to fall apart in April. And the charts didn't really show that. The charts indicated that, yeah, we're going to fall apart, but not in April. All right, probably not until the end of the year and after the election. And I think, you know, the Fed's job is going to be to the powers that be are going to try to keep this whole thing going, keep it stable, both in the real estate market and in the stock market until after the election, at least. So they'll do everything in their power to do that, including, you know, maybe lower an interest rate before the election as well. So I'm pretty confident we're going to head into that target zone even further on the Dow Jones and keep on going. And since we're talking about that, let me scoot over. So Kenneth, regardless of the earnings, maybe you'll get a knee-jerk pull back a little bit, but this uptrend is not over. Okay, so any type of earnings announcements, eventually whatever the knee-jerk reaction should be, it should be moved higher. Okay, so keep that in mind. All right, quick look. Let me just run over quickly to the Dow here for just a second. All right, and take a look at that. And you know, here's the target up here. And look, we're knocking on that door here. That looks like a bad price bar there. So I'm thinking basically at this particular point, my target for the Dow is 40,352 up to 47,000. So I'm thinking we got a little bit more room to the upside before we have to worry about the markets overall. Okay, so that is my deal on that. And here is Frank. Frank, how are you doing? All right, he calls himself Biddy because in our day trading room, we all have nicknames, and Biddy is his. And I'm not going to tell you what mine is, but that is, and Biddy stands for Bitcoin because he likes Bitcoin. All right, so let's take a look at gold here. Good one to look at. I'm sure that's on everybody's mind. So let's see what we got cooking here. All right, so gold heading on up, as we certainly can see here. Okay, we have green PTFs across the board, so it's not done going up. All right, and if we look here at the longer term charts, what we're kind of keeping an eye on, you see this blue line down here? Can you see that? Let me just make that bigger. See this little blue line here, right here? This blue line represents the owl high back in 2011, which was wave 3. So this one is wave 5. This is a wave 4. And notice it says wave 3 because we're in wave 3 inside wave 5. This is the major 3. All right. So don't forget that. So that's a key element here because that's 3, 4, 5. And when we look at that way, let me just adjust the software for a second so you can kind of get an idea. Let's take a look at that and extend the wave out here. And okay, so 3 is still there. Okay, so we're good there. Okay, so we're in wave 3 of 5. So basically a little higher, more highs on that. I think we're already in the target zone. I know that from before, but we're going higher. So I think probably, you know, as far as new trades here, it would have been nice if you got in way back further after wave 4, but there's still potential here. Okay, so if you're long, I would stay long. Okay, that's basically the bottom line here. That's how I would handle this particular move up at this particular point. Now, let's just see if we can get a short-term target on this. Let me see if the daily chart might be, yeah, this would be better for that. All right, so let's take a look at a short-term target on this and see if we can get this thing accounted for a high here. So maybe something like around here. Yeah, that's not going to work either. We've got to use the long-term charts. All right, let's try this. All right, so extensions, 1, 2, 3. See, we're already kind of in this, even in the target zone there. But, you know, it can go much higher into the target zone. So that's what we're experiencing now. So there you have it. I'll leave that up to how you want to play that. I'm not going to recommend it because we're already in the target zone and we're going to go up a little further. Of course, we're starting to see bearish divergence and we're getting a hook on the daily chart, which is maybe getting ready for a pullback at this time. So as long as some of these PTFs rather stay green, you've got more highs coming in this trend, okay? All right, silver. Silver I'm a little bit more excited about than gold, simply because at this particular time, it has broken out. Notice on this weekly chart here, all right, it had a pennant. Remember I said if it breaks from the pennant, then chances are it's going to start to trend. It did, and then it broke out from the channel itself, and now it's making new highs, okay, which we kind of predicted as well. Problem with silver right now, we're getting close to a short-term target. Doesn't mean the trend is over by any means, because I don't think it is. But short-term, our target is 28 to 31, roughly. So we're approaching that. And long-term, I wouldn't be surprised if you're willing to hold this for quite some time, that we should eventually break its 2000, what was that, 11 high right in here. All right, yeah, 2011 high, just like gold. So this one has a little bit more profit potential per se at this time because it's just starting to break out. Gold broke out earlier. So I'm very bullish on silver. But again, if you're an active trader and you wanted to, you know, get out during this sequence up here, because remember I said 3, 4, 5, there are 5 waves in a trend. So then you're going to get a pullback. But if you're a long-term holder, then this is going to be just a temporary pullback and a bigger onsetting trend up. Okay, so that's kind of where I'm at on that. So I'm not going to recommend it because now it's so far along. All right, but thank you, Frank. Good. Both are good. All right. All right, let's take a look at Stu. Back Stu, GDS watch list. Good job, Stuart. So we have things called watch lists, and we have you know, more immediate trades to take. So watch lists are great because that's how we build our potentials, right? Potential trades. It's kind of like, I want you to think of a sales funnel. You know, like in salespeople, they put prospects that are hot in one sales funnel and prospects that are kind of lukewarm in another one. Same thing with watch lists. You can have a hot watch list, a lukewarm one, and so forth. But the idea is you always want to have a full funnel, just like in sales. That way you always have candidates popping up. And so it's a way for you to build a steady flow of prospects. Same thing with the watch list for stocks. We're trying to build a steady flow. So we're not always, you know, trying to, at the last moment, find stocks to trade, right? So that's just something I like to do. And Stuart, of course, has attended all our courses, so he's kind of up on that. All right, so Stuart, on this one here, no go on this. And I got to tell you why. We've got a pesky little red PTF here. So that's basically saying the bottom's not in. Now, if this abruptly turns to green, then that changes things. But for right now, stay away from it. But you are right. Keep it on your watch list because it's getting close. Every time I see a big move, whether it's up or down, in this case, it's down, then if we get a break up here, you'll get all the shorts covering. You'll get the value investors possibly coming in. So you get a lot of reasons for buying coming in here and not so much for selling anymore. Selling's done. But now you get a correction. Now, whether this thing, whether GDS or whatever stock you're looking at is healthy, then it will keep going. If it's not, once these coverings are done, the covering of the short positions and some of the new traders just trying to catch the little trend, once that's done, it'll fall again. But that's that basically usually will take it to what we call a fib retracement level. That's the whole point for these. And so when all the short coverings come in and all that kind of good stuff, you're talking, if it happened now, it'd be around $36, $37 up to $56 before it possibly could run out of steam. And if it doesn't, and the company's solid, it will keep going, okay? So that's kind of why I draw those fibs in. And I don't draw them in. I don't draw the fibs in like other folks do. I don't use the top always. I use the Elliott wave sequence to draw them in. So I'm looking at the chart, trying to look at the wave structure. All right, so that is that one. Now, GOOS. Let's see what else is cooking here. All right, goose. All right, the goose is cooked, right? All right. So again, I see what you're doing, and I love it because it's what I do. This should be on your watch list still, red PTF. Anything coming up here is going to be temporary. Now, the problem with the PTF sometimes is you can have a red PTF during the entire fib retracement area. So that's the other issue on the long-term chart. So you may have a retracement and then it comes back down, and of course the PTF will be correct. So this is a tough call. We're starting to take out some key areas here. So I'm not going to recommend this. Simply, I don't like the red PTFs. I mean, you got to at some point choose the rules you want to enforce, so to speak. So in this case here, any type of retracement here, let's see what we got. If it does come up here, we're looking at 17 to 21 and possibly a little higher, right around there. Okay. So I'm not going to recommend this, but the PTF is keeping me out. Okay. For the most part. All right. Thanks, Stu. All right. Mark, how are you, Mark? NVAX. Let's take a look. All right. Also, tell me what you think. If you're long anything, or if you're, if you're already long, let me know. If you're thinking about it, let me know. All right. So a nice jump off the bottom. All right. Whoa, green PTFs all across the board, right? You see that down there? All across the board. And so that's a really, really good sign here. Let me just move that up a little bit. All right. So we've got a pyramid here, pyramid there, green, green, green. Okay. So, here's one where you have a gap, and gaps usually occur in the market in 3 distinct places in a trend: the beginning, middle, and end. So this is a huge, big gap up. So this baby looks to me like we had a lot of short covering, and we're starting to take off here. Maybe you had some news on it, but nonetheless, as traders, sometimes we don't really care why it's trending. We just don't want to miss it, right? All right, so what do? You've got a gap up. Do you just jump in and hope the market continues and doesn't fill the gap? Because it's a tendency for stocks to sometimes fill those gaps and then go, right? So there's no question this is going higher. The question is do you get in now or do you wait? Because if you waited and we filled that gap, you're talking almost a 50+% lower price. That's huge, right? Okay, huge. This is huge. To me, it looks like it's going to go up further than retrace that gap, but we have to keep that in mind. Bearish divergence, not quite yet. No, because we don't have another high. But if we get a hook back up, we'll have bearish divergence here. So I'm thinking we're going to have one more little push up and then a pullback. Now, I personally would wait until this immediate move up is followed by a profit taking or correction. Then I'd want to make sure the weekly charts are still as bullish as they are, and then think about going in. So I love it, but I'm going to put it on a hold here for a short-term trade unless you're willing to put your stop way down here. And that's like at $3. I mean, that's huge. That's a big distance. The only way you could play that really that would make any sense is with an option. And if you're going to do an option, I play elite on this because at that particular point, your fib retracement would deal about 90, almost 95 to 151 is probably where this is going. So there's a huge profit potential. All right. The problem is where do you put your stop? And that's going to limit you on how many shares you could get. So maybe an option would be the best thing. So let's put NVAX as a buy with an option, and we'll make that elite. How's that? Okay. That way you don't have to worry about the stop, and you won't get stopped out. All right, so that's that BA. Let's take a look at that bad boy and see what's cooking with Boeing. See if they've had any doors fall off recently. All right, so let's see what we got cooking here. Just make sure if you get that door seat, you put your seatbelt on real good. All right, so let's see. We got red PTF here on the daily, green. All right, close, but this move down, according to our tools, is not over yet. So no long position there, okay? Just wait it out, put it on your watch list. Great. All right, Mark, thank you. All right, let's keep going here. All right, Jim Blue. How are you, Jim Blue? Another day trading participant there. Good to have you here. My comrade, right? Okay, for VOOO. Let's see what we got cooking there. Just so you know, guys, if you like day trading, the day trading room is fun. All right. We have a good time in there. We're kind of like family in there. A lot of times in day trading, you're waiting for the right setup. So you get to know each other pretty well as you wait. It's amazing the topics you cover in a day trading room. All right, so let's see what we got. VOO. All right, so I'm not sure if you're long on this or you want to get long. No reason not to stay long, okay? I don't think going to quite recommend it because we're starting. I got to see where the target is on this. Let's just take a quick look at that. All right, let me just see, run this up here. I think my gut feeling is we're going to be too close to the target. A little bit. All right, so your target on this is 517 to 588. We've got a little bit of bearish divergence. Well, we have bearish divergence building in here. We have green here, so it looks like we're going to have one more high. So this move up I don't think is over, but after it does, then it's going to pull back. And I think that for most people would be a better time to buy. All right. So it's a tough call because you don't know how much more up it's going to go. I mean, I have an idea, probably around 490 to 495, right up around here. So, or here. So, do you buy now and then put your stop down here at the pyramid and leave it alone? You could, but the risk to reward then is not there. All right. So I'm not going to recommend this, but let's take a look at it if it starts to pull back, Jim. Okay. Because you may have some opportunity there. Ooh, UNG. All right, UNG is on my buy list. All right, I think we might have even looked at this last week. It's done real well. It's the target. There's two targets on this. There's a short-term target based on the chart, the center, and that's roughly $21 to 25. And there's a long-term target at $46.60 to $46, almost $47 to $67 roughly on the chart on the right. So it all depends on what you're trying to do with this thing. So basically, there's no more short trades. Short trades have all been stopped out. So you've got a green light on the trades down below, and a little premature based on the weekly chart, but you do have an early entry possible here. All right, here's what I would do on this. If you're a long-termer on UNG, go for it, okay, and hold it. And I would count on holding it for, a good year or two. And you may get into that 46 area because UNG got very beaten down. So I anticipate a fairly nice spring off this, and I think we're seeing it now. So I'm bullish on this, but I was more bullish back when this pyramid formed off its bottom. Now that we're getting closer to the target, we've got bearish divergence and an extremely long owl here. So we're due for some short-term profit taking. And I think wait for that short-term profit taking for all the traders that aren't long-term, and then pull the trigger, okay? If you're long-term, I don't think it's going to make much difference if you go in now or wait for a pullback. You may get 3 or 4. You may get 3 points, 10%, 15% better price, maybe 20. The pullback significant. So that may make you want to wait. But also, too, if you went in now at 1884 and put your stop at the bottom around 14, your risk to reward is huge up to the 47 to 67 range. But you're going to have to hold that for a while, right? So it all depends if you're long term or not. So I'm going to put UNG down for a long term, And short term, let's look at it next week and see if we get some type of pullback from it at some point. And then you want to go in. So all good. All right, USO, our next candidate here. And all these, if you're in all these now, stay with them. Okay, no reason to get out yet. But you do have to consider whether you're short-term or long-term trader. All right, so we've had a move down in the USO market. USO is the ETF for crude oil. Okay, I'm going to open up this crude oil chart for a minute. I'm going to focus on the current dynamics going back to the year 20,000. All right, so, or 22,000. All right, so here was a good bottom here, and then we started moving up. Okay, 3 on this degree. We had a 4, and now this bottom seems to be holding, and we're moving back up. So that's where we're kind of at in this dynamic here. This really should be right there. All right, so we've had a little bit of wishy-washiness over the last 3 months or so as the thing has cycled back and forth. But one of the key elements you want to take away from this bottom is holding. All right. Now, the second thing we want to take away from this is we want to make sure this bottom holds. All right. So if you're long right now, you want to stay long. There's no reason to get out. If you want to go into this trade, let's drop down and take a look at a shorter time frame. My target, short-term target for USO, probably by the sometime mid to late summer, is around $100 to $125. So a little bit more pain at the pump, right? And if you live in California, you'll even have more taxes to pay and even more pain at the pump. But that's another topic. But in any case here, what you have is a situation here where I think USO is in a wave 5. So it's in a bullish wave to the upside, and any pullback here is an opportunity to buy it. All right, until we get to the target zone. And again, that target is 100 to 125. So that's kind of where we're at now. So if you want a little hedge against prices at the pump, this may not be a bad one to do. However, okay, if we look at the short-term charts here, all right, we still have technically a downtrend in place, right? We're starting to break out of it, but hold off on buying it. Let's see if we indeed get a new trend coming up, or are we going to go down a little bit further? Okay, so basically, if we take a look at the fib retracement here and draw that in, we can come across here to here. So we're right smack in a pullback target profit taking zone. We may have a bottom here, but we need a little more follow through before we can really say that. And technically, this is a key level of resistance at the top of that pyramid, and we still have a red owl. So some things, dynamics have got to change there, Jim, before I would go into it. But if you're in it already, and a lot of we actually put a buy on this a while back, and it's on the hold list right now because of this move down. But the idea is I'm not taking anybody out of it yet, okay, because it has not reached our long-term target. So you want to hold that as much as you can. Okay, excellent. Thank you for sharing those. All right, Lowell, KR. Let's see what's cooking on KR. Kruger, I think, right? Okay, so let's see what we got. All right, let's put things in perspective here. See what we're doing here. So we had a big trend up. All right, in 2022 that corrected. We went flat or sideways for a while, and now we're jumping out. And green PTFs on the weekly and also on the 60-minute. And we looked at this before, and there's our target. Now, we're kind of pulling back still. Got a lot of red owls on the shorter time frames. So let's take a look at it next week. We want to see a turnaround. Okay, you ever hear the saying, don't catch a falling knife? That applies to this because it's still coming down. So let's let the knife hit the floor. All right, and then go pick it up. All right, so give this a little more time. All right, INO. Now, INO, we looked at last week and we liked, right? So this is one we still like. So INO remains on the buy list. So yes, I'm liking it. The target is 91 roughly to 144. We're sitting at a whopping $12. Now, you'll get a pullback eventually, but you can go ahead because we've had what I like about this one All right. Notice how sometimes I say wait for the pullback. Don't go in yet on these ones that are coming off the bottom. We'll take a look at this. Okay. You had the bottom, and there's the pullback, and the bottom held. Okay. Really good sign. Okay. So you're off to the races now. Okay. So I would say this remains as a buy. All right. You probably can hold this for a good year or two. All right. So this would be a long-term one. And no time like the present on this one. Okay. So INO, excellent stock, regardless of what the market does. All right. So there you have that. Thank you, Lowell. All right. And Lowell is in the house. Alexander is in the house, as Gene says. Kenneth is in the house. And Al. W, long. W. Just W. Not WMT, but W. All right. So right away, red PTF. Okay. No longy yet. Okay. That's got to go away. Okay. Kind of messy too, but it is coming off the bottom. So I get what you're doing here. You're going for the long-term play, but, technically it's still in the channel too. See how if you drew a line across this top, and where's that bottom of the channel? Right around there. So it's technically still in the channel. It hasn't broken above here yet. So stay away from that one, okay? All right, Lowell in the house with BDRY. Now, BDRY we liked last week, if you recall, okay? So let's see how that baby's doing. At least I think we liked it last week. Hold on, let's get the data over here. Hocus pocus. Slow load on BDRY. Okay, we're waiting. BDRY. Where are you? There we go. Okay. All right, so let's see what we got cooking here. All right, so we've got a breakout on the weekly chart, which is what we liked. We're kind of in a correction here right now, guys. So let's see what's happened. Well, this is kind of interesting. So this is a low at 1232. This is a low at 1266. This recent low is at 1241. So far, the first low is held. So this low is held. All right. Do we have a triple bottom? Okay. Maybe, maybe not. Maybe we're going to go down and make a new low now. All right. Long term doesn't affect the long-term outlook. We're still thinking this thing is now bouncing off the bottom. We have a green PTF over here. So I think what I would do on this one is not recommend it right now as a buy. All right. And let's see if we get a rebound and get above here. So I'd like to see this thing get above 1460. And then I could say, once again, we're in an uptrend. So a while back here, all right, we had a bottom here. So it's kind of an early entry. We have a trend here on definitely on this time frame here. There's no question about it. And I'm looking for this to get actually above this high here. But for right now, I'm going to stay away from recommending that because, in the last few days, last week or so, it has come down again. All right. URA. Let's see how that one goes. All right. So URA breaking out, okay, at this time. And let's see. My only problem with URA here, Lowell, is that it's been in an uptrend, all right, since basically March of 2023. And we're getting a final hook high here. And we're starting to see bearish divergence. We're having more highs coming on the 60. But I think it's on borrowed time, okay? So I'm a little concerned about jumping into this at this time. So I think that's a no-go, all right? Plus, there's a lot of volatility. Look, tough one to put your stops on when they're bouncing around so much. I mean, the pyramids did as good a job as possible until we got to this area here. Then it got a little jumpy. All right, so there it is. All right, Gene, give us a like today. All right, let's see, keep going here. Lowell, nice to see you as well. Thank you. All right, Bradley, good to have you back, Bradley. How are you? All right, Bradley purchased our software a little while back, and hope everything's going good for you. And let's take a look at PayPal. Let's see what we got on PayPal. Okay, so PayPal, we've looked at it before. And again, PayPal is beaten down. I mean, right away, when you look at these long-term charts, it kind of takes the noise out, and you can just see, boom, all right? And now a little bit of sideways. We got some green, which is a good sign. No more red. We had a little red here, but this yellow is neutral, by the way. Yellow on the PTF, which is this indicator right here, okay, on all the charts. You can go long or short on a yellow. It's neutral. When they're green, you don't want to go short, okay? That's kind of the idea. All right, so then you kind of want to go long, depending if you're not getting in too late. All right, so we got a move up off the bottom. So we got let me grab my pointer here. So we got a move off the bottom. We got a green pyramid and green. So this is long, okay? That would be an acceptable long-term trade. Where's the target? Quite substantial. All right, let's just draw in a fib retracement, taking into account all the shorts covering and the possibility of people getting involved in it at this price. And we're talking around 143 to 202 for the target. That's a double your money. Okay, it's not bad. Now, that's not going to happen tomorrow. You're going to have to hold that for a couple of years or maybe a year. Hard to say. Depends how fast it moves up here. But that's looking pretty good. Daily chart, we drew on the same target. All right, so on PayPal here, we've got a green pyramid. We've got a little bit here. You got a red here. Don't pay attention to the MP here. That's a minor pyramid. That's just showing you it's in a correction. So the way you could play this is that if you didn't want to, go in, you could go in now with a green PTF over here. I'm okay with that. All right, that indicates you'll take out this high. Or you can actually wait to see if we do take out that high. But I'm going to say PayPal, if I was trading this one, I would say yes, okay? And I would take it. Now, you may get up there within the year because that's actually quite doable within a year to get up to 144 if this thing starts to take off. So I'm liking PayPal. So let's put PayPal down as a buy, all right? All right, let's go to CVNA. Good job, Bradley. CVNA. All right, so this one is good. I don't know if you're long in this one or not, but definitely a great candidate. Look at the breakout on the weekly chart. Now my problem is, and you guys know what it is that the darn thing gapped, and this move up is getting kind of hyperbolic. And would it have been better to have gotten in down here, which would have been down here, right, off this pyramid, or up here? So, the problem is it's kind of like, people that chased Bitcoin when they got in at 73 and then it corrected down to like 60. All right. If they just waited a little bit, they would have been better. But the market entices us with the greed and fear thing, to get into breakaway trends because you're afraid you're going to miss it. But I would hold off on this. All right. I love it for a long trade. I want to wait for the pullback. So let's make sure this one goes on our watch list, okay? For sure, all right? But I wouldn't take it, okay? I like your other one better for timing at this time, rather. All right, Spider, SPY. Let's take a look at that. All right, so here we go. Big target on this one is around 573 to 715. I think we'll hit that target. We've now got a green PTF on all, long and the short time frames. So I'm thinking we're going to get up there. So this is not one I would take now because, again, it's so far along in the move. And now your risk to reward is kind of getting cut down too much. So if you're long on this and you happen to be trading this, stay long. No reason not to. Use this pyramid here as your stop. But I think we'll get into this target. So you want to give your stop enough room for any type of volatility that could occur. So stay with it, but we're getting close, okay? And when this hits a top, I imagine the rest of the market will start to hit their tops, and it could continue on into the target top for quite some time. So you don't want to just get out, but by the same token, you don't want to be getting in originally at those prices, okay? All right, Bradley, good job. 1 for 3. That's pretty good. What's that, a 333 batting average? Not too bad, right? All right, Eleanor, good to have you here. All right, okay, so Eleanor's in long positions on VRT. So let's just see what we can say about that. Oh, Eleanor, you have done so well on this, right? All right, so again, the higher this goes, the more we have to redraw our retracements that eventually will come, all right? But for right now, you're going to have more highs, I think, sooner because of the 60-minute chart has a green PTF. Now, doesn't mean it won't pull back a little bit. You've got a pretty strong owl over here still, all right? But, you know, it's due for a pullback, but right now it's in an uptrend, okay? We've had a hook. So we've had the hook in here. And Jim, if you're out there, you love the hooks, right? So we had the hook in there. So we're in pretty good shape. And actually the hook gets drawn like this, all right? So there's the hook. And so you don't want to, should I draw my shark? All right. Or have you had enough of my shark? All right. So maybe one more shark in here. Okay. Because you don't want to get eaten by this guy, right? All right, there's the gills, the beady little eyes, and the big teeth. All right, got to make this fun, right? Don't ask me if it's a white shark or tiger. I'm not sure. It can be any shark you want. You just don't want to get bit by it, right? All right, so basically, the reason why I draw that in is because usually the hook is what comes before the next correction, okay? So we're getting kind of close, right? So I would stay with it. I put my stop right here at the pyramid, okay? So that's a low of what, 93, 74. Let me just double check that. Yep, so 93, I'll put it at 93.72 or 73, okay? That way you get out if the thing goes into a reversal. All right, WPM. All right, so this one here has hit the target zone. Again, you want to stay with it. And it's going back up. So, you know, again, you have your pyramids here. If you want to put a scale out here on the 60-minute chart using that pyramid at 55.71, the longer term pyramid would be here at 52.59. And I don't think I would use necessarily the one on the weekly chart. I'd use this one here on the daily. Okay. So just stay with it. No reason to get out yet. And, you know, and this is why, you know, I was saying to everybody, don't necessarily get out just because of the fact, you know, you see something on YouTube. Because if you look at YouTube, you know, they've been predicting, most of these influencers are predicting a total catastrophe for April, which didn't come. And now they're predicting it for this month. Do I think the market's going to break down at some point? Yes, I do. Big time. All right. Huge. But I don't think it's coming right now. And I would be surprised if it comes before the election. After the election, I'm looking for a big turnaround in the markets to the downside, bear market. But for right now, this is why when we looked at the technicals, because the technicals don't lie. Okay. We look at the chart. The chart is reality. And so when we see an uptrend on the charts that has more movement to go from a probability standpoint, that far outweighs somebody's opinion based on fear and greed, right? So remember that. And that's why we've done so well here, because, you know, we have not had that many short picks here because the market's been in a bull market. Now, when the market rotates and go into a bear market, yeah, we'll have more shorts there. And then sometimes when the market goes sideways, and we're waiting for it to tell us which way it's going to break out, we have nothing. Okay, so we're kind of doing it the right way here. All right, so BROS, stick with the charts. That's my thing. All right, so not a lot of history on this one. You've got green PTFs on all these. You've got bearish divergence building in the 60. So again, you're probably going to get a pullback on this move. But as long as, if this pullback came now and this stayed green, I would feel pretty confident we'd come down to around here and turn around. That's a fib retracement area. So you could hold that and put your stop somewhere under that. I wouldn't buy into this now because I think we're getting close to a pullback, but that's kind of the way I would play it. All right. So not a lot of history to get me too excited on the weekly chart here, Eleanor. So I'm not really too enthused with this one. The other thing too is it's possible we could go higher before a correction and turn this yellow and turn this one yellow, and then I'd probably get out, okay? Because that means there's not enough history for me to get a really good grasp on if we're going to make any more highs on this. It's messy. So the only thing I'm telling you to stay in for is because I have two green PTFs on the 60 and the daily chart, which have a 75% probability of telling me to tell you to stay with the long trade on this. But if that goes away, then you got to get out. Okay. Thank you. Good job. All right. Let's see here. Okay. Bradley, happy Friday to you and everybody else out there. Gotta love Friday, right? All right. Frank, ATA alias Biddy. And as Gene says, that's a great call sign. All right, Eleanor's back. Let's take a look at these. Okay, long on these two. All right, CRWD. Let's take a look at those bad boys. All right, so this has gone up again. All right, so we got to redraw this thing. And now we have a yellow PTF. See, so here we had one more hook up to the high. This is a great example of something like I was telling you before. You see this? It's yellow now. So it popped up here, and we've had an awful long L, but we don't have bearish divergence because this is higher than this. Okay. All right, we have strong here, strong here. I guess I would hold this. No reason not to at this time. All right, let's see if we break out above this high. If we don't, then it may start a correction at some point, but it looks like it's, soaring on up there. So I guess what I would do is put my stop here at this pyramid. Let's let it unwind a little bit further and see if it can attack this top. And that low is 288.54. So I put your stop there because it will correct at some point. But the thing is here too, we got some time to analyze this thing, because if it does not break the top, let's just say, well, that's actually not the top. Yeah, it is. Okay, so that's the top. All right, if it does not break the top and falters, that's not a reason to panic. But if it does this and then that, then you've got a downtrend in place. And then that's the time to analyze it again. Okay, so you got a little time on it. Applied Materials, AMAT. Used to trade this back. I'm going to go back as far as the 90s like crazy. This was a big one on my list. I actually had one incident on AMAT using options back in the 90s. It didn't end too well. I did not trade that well on that one. All right, so let's see what we got here. All right, so we've got green PTF there. We have yellow all across the board. We just turned to a yellow there. We've exceeded the target. All right, I want you to put your stop on this pyramid here, which is a low of 208.50. Oops, sorry. 20. Can't hold it steady. Come on, hold it steady, Ben. 204.70. 204.70. Now, if this goes into a correction mode, we'll take a look at this again and see if the weekly PTF is still green. So you may be in a wave 3 going into a wave 5 inside this sequence here. So, I don't know how much profit you got in it, but if it was me, I'd want to get out at that pyramid. Okay. All right, Alexander, how are you? McDonald's. All right, MCD. MCD. All right, raised prices, kind of taking a hit a little bit, right? All right, so it looks to me, Alexander, we made one recent high up here. Had a red PTF for quite some time. It's kind of, snuck up higher. even since COVID. But it looks like now, so the red PTF is what it's saying is when it corrects, it should go below this point. So it's, we're starting to see some movement to the downside, no question about it. Now, you're long on all these. So where did you get long? I mean, if you got long early in the trend, you should be really happy and you should be out for the most part. I would not want to stay long here. Okay. Could you get a little move back up? If you went long recently, I don't understand how you could have done that because these are all pyramids coming down. If you went long thinking this was a bottom, well, you would have been stopped out. So you shouldn't be long. All right. If you're long now thinking this is a bottom, well, keep your stop down there. And let's see if you get a rebound, but I don't know what your target would be other than possibly breaking out and making a new high. And if that's the case, then trade your plan. All right. Keep your stop there. There's a lot of times, that we start a trade based on our analysis, which is the plan. Okay. And then we abandon the plan. So try not to abandon the plan unless things change so much that the original plan is no good. But if you're thinking one more high against this red PTF, okay, keep your stop down here. But it's a risky trade. That's all. All right, V, let's take a look at it on V here. All right, V is approaching its target, right? So we got one green PTF left here. I think probably this will head back into the target. So I think you got one more. You see, we haven't had a hook on the daily chart. See this move up? There's, I guess, a little hook here. Okay, so you did have the hook. All right, so now this could be coming down a little bit more here. But if you hold it, you should be okay for more highs. But again, if you're short-term trading it, you would have been out, okay? So question is, did you get back in down here? And if so, there's no ABC I see here. So this is not a clean correction, all right? Is this an ABC here? Yeah, but the C wave is no good because it has to be as long as A wave. So what if this takes out this bottom here, then this is the A, this is the B, and then this will be the C. See? So not sure when you got in on that. If you're long-term on this, then put your stop at this pyramid here and leave it alone, okay, until it gets back into the target. Wait for this to turn yellow and then get out, okay? Because I know you have a software, so you can do that. And Amazon. Let's see what we got cooking. Of course, if I type it in correct, it helps. AMZN, no A there, right? All right, let's see what we got cooking here. All right, so Amazon hitting the target. Okay, so it's doing what it's supposed to do. Question is, are we going to pull back or go further into the target? Well, all right. I certainly order enough from Amazon that it should go much further in the target, right? I'm sure all of us are in that same boat. But we do have a red PTF on that 60-minute chart, which is causing me a little concern. So I think we may be going into a move down here a little bit. So I think probably what I would do, okay, if you were long on this, you'd be out on that pyramid. So based on this, I don't know where you got in, but I would probably trail my price bar up under this here. So I'd probably put it at 182.72. That's where I put my stop. Because if it breaks below that, then the PTF on the 60-minute says it's going to probably go below 166.32. Okay. So this is a good way to lock in some profits. All right. All right. Yes, Al, I stepped away from W. I did. So you're going to have to watch the recording on that. Should I be nice and give Al another synopsis on W? All right. I'll do it again. All right. So on W here, Al, we see the breakaway possibilities here, but a red PTF would keep me out of it. Okay. That's why it didn't go on the buy list. All right, Kenneth is asking, using the IEF as a bond proxy, where are interest rates going near term? Well, we covered that, Kenneth, on our Wednesday market, our market forecast, basically. And the interest rate thing is an interesting situation because inflation's remaining sticky, right? So we have not got down to the Fed's 2% area. All right, we're still above 3, like 3.4, I think. All right, so it's still remaining a little sticky there. So it's causing them quite a bit of angst on what to do with that. Now, it's an election year. All right, so, you know, they kind of want to keep the markets as stable as possible through the election. And if that means lowering rates to do so, they will do it. I don't think you're going to see a rate hike, so I don't think you have to worry about that. But, you know, whether they're going to hold them flat or decrease them is yet to really be seen. And according to the stats, they should hold them flat. Okay. But again, it's an election year, so that can throw a little bit of a multiple in there. My guess is the June, they'll hold them flat. Okay. And the market's doing okay right now. So that's where we're at with that. All right. Based on my opinion, of course. All right, so let's see. All right, another commercial from Gene. Give us a like today. All right, Al's back with QTWO. QTWO. All right, Stu, let's see where we're heading on this baby. All right, long. Well, I think you missed the long, okay? I think it's too far broken away now, so no long here, okay? I think you'd be buying into the greed. Wait for the pullback. Remember, Bitcoin went up to 73 and back down. So markets, you know, get a little bit bubbled and then come back down, and that's where the better buys are. Okay. Same thing with that one. All right, let's take a look. Frank, how are you? GDRX was long, had stopped too close, and was dropped. Now, not stopped out, now going up. Well, let's take a look at that GDRX and see what's cooking with that. GDRX. All right, long term. All right, you can hold this one for like years, okay? But your stop, look at if your stop was anywhere in here, yeah, you would have gotten stopped out. You have to keep that stop, Frank, under the lowest point in whatever mess you're looking at, like this, okay, back in here. That's kind of where you want it to be. So your stop needs to be at like 534. Now, this has a lot of potential for a lot higher, okay, based on if there's any short coverings on the weekly chart. So this is huge. And, but, you know, you got to be willing to give it room, okay? So maybe 21 bucks to $31. So that's, you know, that's a good 100%, 200%, almost 300% return, right? Okay. So just got to be careful in the stops. So when you're in something as volatile as this, just be careful, okay? Give that some room. And if you can't, because your account size isn't so big that it would allow you a sufficient position size or trade size, then see if there's an option and do it that way. Because with an option, you can limit your risk control to how much you pay for the option. Whereas if you buy the underlying, you have to have your stop exit in place to limit your loss, right? So options give you a little bit of leeway there. All right, but as Gene says, happy Friday. All right, so let's see what we got here. Mark, let's see. Hi, Mark. All right, CCJ, no position, but considering it. All right, so the problem with these CCJ is that it's just too far gone already. It's already up too high. All right, we got bearish divergence even building on the weekly. So, you know, if you're back in here, let me just see if I can run this thing off the chart for a minute. So take a look at the chart on the far right. See, if you consider a long position and you got the owl really far away from the zero line, then any pullback you want to buy, okay? And here was the pullback, okay? Boom, all right? So now, that's the hook too. So now you've got a situation, bearish divergence on just about all the time frames, all right? This is green, so we're, this move up is not over yet, but you're playing Russian roulette of when it's going to end, okay? So I would stay away from this, okay? It's just too far gone, that's all. All right, Alexander is back with Mara, M-A-R-A. We've looked at that before. He's long on Mora. Okay, so Mora, all right, has, went through a bottoming sequence here. Back, it started in beginning of the summer, back in 2022, and then finally broke out here in this year, early this year, like October. No, not October, like January. Okay, but it started moving up in October. All right, so it's what I like about it's pulled back. That's pretty good. Okay. Again, I don't know where you got in, but you need to have your stop under here if it's a long-term play. All right. So let's figure out where this is going if it is a long-term play. All right. So we have not much history there, right, to help us. We have no PTFs to help us. We've already had a pullback. I would say if you're long on this, try to ride this leg up as far as you can. Have your stop right here. But if you get stopped out, get out. All right. Because not 100% sure without a green PTF here that we're going to get above this spike. And even if we did, you'd have to wait quite a while. So that's not my favorite. All right. G-Day T. Back in here, it would have been, but not now. All right, so this one's popped up off the bottom. Not a lot of history on this. No PTFs to help us. The only thing that's showing is pyramids here going up. We're starting to see bearish divergence occurred here. Now we get into the red, so now we're in a correction. So don't do anything with that. I would get out, okay, unless you're willing to see what will happen when this gets down to a corrective area. So let's just see here, from here to here. Let's see, it's 44. This pyramid here has a low of 46. So chances are this is going into a correction. You get stopped out on that pyramid. So if you got in on this pyramid and stopped out on this one, you made a profit. So that's okay. But I don't know where you got in, and it looks to me like we're probably heading down to 44 to 36. So you'll have to make your decision on that. SHAK. Let's see what happens. It's not at this particular point in your long. I'd probably stay long and put your stop there. All right, Shack, you're long here. All right, we've got bearish divergence building here, and now we're starting to see no more green, no more yellow PTF here. Again, not a lot of history. I'd get out. Okay, you have a situation here where your pyramid has been hit, still going down. Maybe it'll go down a little more and recover, but it's just not a great one. Okay. All right. Thanks, Alexander, for sharing that. Okay. Let's see what else we got cooking here. Gene, Al was voting for you for another look at W. Okay. Al's got a lot of friends. I always have to do it, Al tells me. All right. Kenneth, it is full recording of Bennett's analysis from this week. Yes. You're referring to the market review I do on Wednesday. Yes. All right, Frank. Okay, thanks, Frank. All right, cool. All right, let's see what Frank Turbin has to say. We've got two Franks in here. Frank Heisman, I'm going to have to start calling you Biddy so we can segregate that. All right, Frank Turpin. Ben, if buying options and stock goes down below a stop area, do you exit the option? That's a very good question. All right, so there's two ways to control risk, Frank, with options. One is when you buy the option, the premium you pay for the option, make sure that doesn't exceed 2% of your account size. if you're using 2% as your risk. Okay, that way you don't have to worry about anything on the chart. You just hold the option and it either expires worthless or you lose the 2%, which is okay because that's within your risk control guidelines. All right, or it goes in your favor and you don't have to worry about the volatility. All right, so that's one way. The other way is you buy more premium than you should based on the charts. However, you do have to get out when you go below the stop loss when your risk exceeds 2%. Okay, that's a little more difficult because you have the time value of options and the intrinsic value, and so it's sometimes hard to predict what the actual value of the option will be if the chart stop is hit. There's the Black-Scholes model that helps you with that, but nothing's guaranteed. So that's a little bit more difficult. A simpler way to do it is just limit the premium to the amount you can afford to lose. Okay, good question. All right, I think that's it. All right, we've been here for an hour and 22 minutes, a good hour and 22 minutes. A lot of fun today, but we found quite a few good stocks again. So based on, it's almost like a barometer. When you come here, all right, it's kind of funny because when you come here, the number of stocks that we find is kind of an indication on how healthy the market is, right? And so there was a while there where we were only finding like one or two, and that's because it was kind of like going sideways, very volatile. But now it's broken out again, so we have more stocks. So let's take a look. I'm going to go over now. I'm going to summarize the picks for this week. So we have PFE, Pfizer. We have Ring, RNG, and that's a long-term one. Remember that one we looked at? We said it's good for a long term. So keep that one in mind. We have NVIDIA, short-term, one more move up, and then that might be it for NVIDIA before it goes into a more significant correction. NVAX, all right, use an option leap, all right, because the stop's too far away. All right, UNG, long-term, INO, long-term, and PayPal, more of a short-term trade. So a lot of good stocks for this week. We've got a few on the watch list like CVNA, and a few others that you can keep an eye on. All right, so we're going to be back next week, and we'll see how we do on this. We're going to be watching Bitcoin very closely as well. I think the coins are kind of in a critical area. If they break above its current resistance level, I think they could really start to move again big time to the upside. If they break below our support area that we're watching, then that means it's probably a little bit more of a correction coming in the coin. So we'll kind of keep an eye on that. Anyway, the mood in the market is pretty good right now. So, I think the bull run continues for a little bit longer. All right, so that's it for today. I'm going to put it on some of the intraday time frames before we call it a day here. Thanks again, everybody, for being here. Give us a like. And now let me go back to the full-size charts. And let's see what's cooking on the intraday time frames. And we'll bring some of these up here. I don't want to look at copper. Let's look at the MES. So on these intraday time frames, notice I have 3 charts again, but also 2. Notice that they're different time frames. I don't know if you can see that at home. This is a whopping 15-second. This is a 1 minute, and this is a 5 minute. So these are the time frames we use for the most part in our day trading room. All right, so you can check those out. And red PTF on the 5 minutes. So it looks like maybe we're heading down a little bit here. Kind of messy though, isn't it? A little bit of messiness here. All right, kind of like to look at it a little clearer. There is, sometimes we just trade the PTF. So there is a move down coming, it looks like. I imagine the equities are kind of all similar these days. Let me just remove some of these leftover lines from earlier this week. All right, but again, red PTFs across the border. Let's quickly go to crude oil. These are micro contracts, messy on crude oil. However, it should resolve to the upside based on the PTF on the weekly chart, but no trade there. Let's go to Henry Hub natural gas. Ooh, that baby's coming down. Okay, so Henry Hub is coming down. Let's see where we are in terms of, is it near its target? And it looks like to me it is. So I don't think I would short this here. Look how long the owl is also on the 15-second. we have more lows coming, but the short trade would have been better off once it entered C wave. So 3, A, B, C, and I would imagine we got one more move up and then down and then up. And I say that because it looks like 3, 4, 5 inside C wave. So we'll see. We'll see. If anything on this one, I'd be looking for a long trade after this correction ends to the bottom. Okay, let's take a quick look at gold on the micro level. Okay, so this is we got more highs coming on that. However, I wouldn't rule out the fact that we are in possible. Well, we could be in a 5 here. Okay, so but we're coming down. So that 15-second chart is too bearish. Okay, I wouldn't do anything with that. All right, so let's go back to NG. I'll keep it on here, put a little music on, and we'll see you all next week. And don't trade off these charts because I'm going to end it here pretty soon, and I wouldn't go short here. I would wait for the long. All right, thanks everybody. All right, let's see what we got here. Thanks, Ben. All right, my pleasure, Frank. And Biddy, we love you too, buddy. Okay, so thank you for being here. And Gene says the same thing. And let me just see. All right, I'll put this up and leave this up in here to remind everybody to give us a like. All right, guys, have a good week. We'll see you next week. Thanks so much.